Our world is rapidly changing. With such a high percentage of money being tracked electronically, it is more important now than ever before to learn how to keep track of it. So, as a young adult learning how to budget, get your first savings account, and file taxes, what are the basics you need to know? One important term is budget. A budget is taking a look at your monthly income, which is the amount of money you make on a regular basis, versus your expenses, the amount of money you spend over a specific period of time. To start out, most people add up their bills for a month and compare them to their total monthly income to see what kind of budget they have. To find your total monthly income, you multiply your hourly pay by your hours worked per pay period. Some employers pay weekly, others pay bi-weekly or once a month. If you are paid once a month, one paycheck would equal your monthly income. The next two are dependent on how many weeks are in that month. Bi-weekly is every other week, so you would add up 2 or 3 paychecks. And weekly, which is every week, would be 4 or 5 paychecks. When making your budget, however, the easiest place to start is to look at your monthly paycheck stubs and add up what is direct deposited into your checking account to find your exact monthly income. With that number, you can begin to subtract your expenses and see how much money you have left over. This is known as disposable income, which is the amount of money you have left over after budgeting out your fixed expenses to spend how you like. While budgeting might seem restrictive at first glance, in reality, it just helps you to spend your money the way you want to. For example, say you dream of going on a cross-country road trip. If you look at your budget and adjust your flexible expenses over a calculated period of time, you can make your trip a reality. That's the benefit of budgeting your money. It puts you on a direct course to accomplishing your financial goals. So back to flexible expenses. Flexible expenses are purchases that can be cut back or eliminated when creating your budget, such as grabbing coffee at a coffee shop or the amount of money you spend on groceries. The opposite of a flexible expense is a fixed expense, which are expenses you have an obligation to pay at a certain time, like a streaming service or your rent. While you might want to classify getting a coffee from your favorite coffee shop as a fixed expense, it is considered a flexible expense. And even though it's a tiny cost compared to something like your rent, over time, it adds up. Let's use a graph called a budget line to see how a cup of coffee adds up over a year. If you were to purchase coffee for just $5 once a week, after a year, which is 52 weeks, that would end up costing you $260. If you were to estimate your road trip would cost $500, you can use a line graph to see how your purchase of coffee impacts your road trip. By cutting coffee out completely, you would be able to afford your trip in 2 years, where if you cut your coffee trips in half, you would have $260 saved towards your trip and be able to get coffee every other week. And that is just by budgeting something as simple as coffee. Think about the other items you could budget to afford going on your trip even sooner. So let's review everything we've learned. A budget is a method for spending your money the way you want to after paying your fixed expenses. The easiest way to start is subtracting your expenses from your income over a month and seeing what your numbers look like. There are 2 types of expenses, flexible and fixed. Flexible expenses are purchases such as coffee or groceries, and fixed expenses are purchases such as a streaming service or rent. Lastly, small purchases add up over time. So by spending less on flexible expenses like a cup of coffee, you can save up for dreams that seemed impossible before you started to budget. For a free downloadable budget that contains all the topics we discussed, go to wbgu.org/educational videos and click on Beginning Balance. There are so many resources available to track your money digitally, and there really is no downside to keeping better track of your money, so what are you waiting for?
This financial literacy video was brought to you by a grant from the Ohio Broadcast Educational Media Commission and WBGU PBS in consultation with the Ohio Department of Education. For more videos in our financial literacy series, please go to wbgu.org.